What's up, traders? Today we're covering everything you need to know about the All Products tab here inside of ThinkOrSwim. Now, a majority of the action that takes place in this screen does have to do with the options chain, so we're going to spend a considerable amount of time on that dropdown, but for the sake of being thorough in this tutorial, we're going to cover everything that you see here in the top left-hand corner of my screen. If your screen does not look like mine, maybe you're missing a couple of these dropdowns, that's fine. We can solve this by clicking on the little gear icon here in the top right-hand corner, right underneath where it says OnDemand. When you do that, you're presented with a little drop down and you can choose components to either hide or show. By default, the underlying will be locked and turned on, as will be the options chain. But aside from that, you can customize whether or not you want to show the trade grid, the options statistics, options time and sales, and the product depth. Another thing I would point out from this menu is take a quick glance at the order of what we have over here. So underlying, trade grid, options chain, so on and so forth. We can change that, right? I can just click and drag, and just like that, we've replaced or swapped rather, the options chain has been bumped up one and the trade grid has been bumped down one. So if you want to change the order, you can do so in this menu as well. I'm going to put it back to normal like this. I believe that's the default, at least it's what I'm used to. And let's get right into this. So we're going to start from the top and work our way down through all these drop downs. At the very top, obviously in this ticker box, that's where you type in what you're searching for. We are going to be using the SPY, which is the S&P 500 ETF. It says that in the little descriptor line right here. If you were looking at a company, it would say the company name. After that, we have the last traded price during the regular trading hours session. We have a little segment where it gives us the net change on the day, both in terms of dollar amount and percentage point. Then we have the bid and the ask, and this will take into account the after hours trading. So notice the last in the regular trading hours was 412, but in the after hours, it traded 413.35 by 413.45. From there, we have the exchange on which this ticker is trading. So the SPY trades on the NYSE, the New York Stock Exchange. If we were looking at the QQQ, it would trade on the NASDAQ, and right here it would say NASDAQ. After that, in purple, we see EXTO eligible, which essentially just means that from Monday to Friday, you can trade this instrument around the clock. I believe they refer to that as 24/5 trading. Yeah, see, this instrument is available to buy and sell 24/5. So anytime the market's open between Monday and Friday, I suppose now open isn't the right word, but between Monday and Friday, rather, you can trade this around the clock. It's simple as that. What we're not seeing here, which is shown when the market's open, is the letters ETB. And I know for a fact that the SPY is, of course, ETB, and that stands for easy to borrow. And that's in reference to its short status. Can you enter a short trade on the SPY? Yes, you can, because it's easy to borrow. If you see something that says HTB, that means hard to borrow, and your order may not be filled on that particular instrument. So if you're looking at an obscure penny stock and it says HTB, your order may or may not go through if you're trying to short it. The other thing that you might encounter if it's HTB is an additional fee to locate those shares to short. The last thing that you might see is NTB, which means none to borrow, meaning you cannot short whatever you've typed in as your instrument of choice. So that is going to basically sum it up for our top level there. Underneath that, let's get into some of these drop downs. We have the underlying. This is pretty self-explanatory, pretty straightforward stuff. We would call this top of book information. Once again, we see that last price. We already covered it here. Net change in terms of dollar amount, we covered that here as well. Bid and ask, what do you know? We covered that here as well. This is where things get interesting. The size is listed, and this is in reference to the bid and the ask. So 98 actually is 9,800 shares. Always add 2 zeros or just multiply by 100. And this is in terms of the bid on the left and the ask on the right. So on the ask, we would say that's 1,600 shares sitting there. All right, so that's the size on the bid and ask. After that, we have the total volume that was traded on today's session. We have the opening print, which of course will not change. That is the open, but the high and the low of the day can of course change as price moves either up or down, right? So that's top of book information. After that, we can get a little bit more in terms of some of the fundamentals of whatever company or ticker you're looking at essentially. Last size, of course, again, just add 2 zeros there. It will be displayed very similarly to what we have up here. The market's closed, so it's saying 0. We have yield, that's the dividend yield, and the SPY happens to pay out 1.33%. The PE ratio is listed here at 96.26. The dividend itself, in terms of the dollar figure that will hit your account if you hold the SPY. Now, you might be saying like, Well, 1.36, so $1.36 is certainly not 1.33% of 412, which we know is the last traded price. And you're absolutely right. But if we look at the dividend frequency, Q here means quarter. So once a quarter, you'll be paid that dividend. And obviously, that would mean 4 times a year. So $1.36 times 4 gives you, I don't know, roughly $5 and something, which is, again, close to about 1.33% of your 412 number. The other possibilities for dividend frequency might be M, which would stand for monthly, so once a month they'll pay you, or S for semi-annual, which would be, of course, every 6 months, so twice a year. The ex-dividend date just means the last time that dividend was paid out. You got a 52-week high and low listed here, as well as the total float or shares that exist out there for traders to trade back and forth, right? The beta, this is something interesting as well. The beta is the volatility in relationship to the quote-unquote market itself. Now, the platform is set up to use the SPY for beta as a reference point, so of course, this will say 1. If you're looking at a stock that is more volatile than the quote-unquote market or the S&P 500, it will be a number greater than 1 and obviously less volatile, a percentage, so a decimal point here for your beta read. That is all top-of-book information that we can get from the underlying dropdown. Let's continue along and get into the trade grid tab. This one is pretty cool. It's basically a chart window that you can add into your trade tab, and you can control this, or how many of them at least that you're presented with this little option right here. So we have a 3-pack currently. If we come in here, we can change it to 2. We can change it to 2 by 2 for 4. You can knock yourself out with all the different configurations. An interesting little idea here would be to sort of link all of your things together. So we have the SPY in each of these options. It's all linked to red 1, and it's being controlled by this master ticker up here in that initial search bar. Some cool things, right? So we've got some news, we've got the level 2s here, and we've got another window of level 2s. That's not too useful. So how do you change what shows up in the trade grid? Well, each individual cell is controlled by this little 3-bar icon in the top right-hand corner of the cell itself. So let's change this one here on the right to something other than a level 2. I'll go to Gadget, and I'll change it to something like the dashboard or a dealer box, right? I can buy and sell based on clicking here and here. All right, so that is the trade grid. You can do almost anything you could do with a regular chart tab in the All Products tab here under the Trade tab in ThinkOrSwim. So pretty cool stuff. And again, you don't have to link these things. Let's say you wanted to keep tabs on the QQQ. I could come in here, type in the QQQ. I probably wouldn't want to be trading it while I'm looking at SPY information, but if I want live news on the NASDAQ, then boom, now I have live news on the Qs. All right, so that is going to be your trade grid. Let's get into the meat and potatoes here. Of course, that is our options chain dropdown. This is where all the fun stuff happens. Let's get right into it, right? Let's dive in head first. So first thing I would point out is that everything that's listed here is considered a series. It is also an expiration, right? You can hear those words being used interchangeably in the sort of market lingo, right? In terms of syntax, as these things are displayed, you have the day, month, and year of the expiration. So this is an expiration date. After that, in parentheses, it's going to give you how many days until that options contract expires or that series expires. And then you have the amount or the multiplier of one contract. So as we know, for most options contracts, one contract gives you control of roughly 100 shares of the underlying instrument, and that's why we see 100 there. After that, if it's a weekly expiration or a non-standard, it will be listed in parentheses. You can see some of the quarterlies are also listed there, and then everything that's in gray is more of your standard expiration. If we go all the way to the right-hand side now, we see a percentage. Now that percentage is your implied volatility, and after that, in parentheses, you have a plus and a minus, and then some numbers. And that number is the expected move based on what the options market is pricing in for this particular expiration. So in 2 days from now, on the Monday session, we're expecting roughly an $8.49 move. Okay, so that's what that information is telling us. And again, the percentage is your implied volatility. A couple of cool things before we jump into the filters, the spreads, and the layouts. If we click on this double down arrow, all that's going to do is expand everything in the chain. So notice how if I scroll, they're all expanded now. If I click it again, it's going to collapse all of them. If you want just one at a time, of course, you can click on them individually. You can go out a little bit further, click on it again, so on and so forth. Pretty self-explanatory. And then something that I should just point out, but that isn't specific to this tab, is that anytime in ThinkOrSwim you see a double sort of square icon like this, it means that you can pop this window out. So if I click on that, notice that we've now populated a new options grid, and we can essentially move this to a different screen, right? If you've got multiple monitors, if you want to use this primary build for charting and you have your charts tab open, maybe you move this new window that we've generated over to another screen, and now you can look at options over there, right? So that's what that does here in ThinkOrSwim. Let's get into it now. I'm going to open up one of the expirations here, the one that's going to be for the Monday series, and we can see on the left-hand side we have calls, and on the right-hand side we have puts. We can show a different amount of strikes by using this drop-down. If I only want 4, now we've got 4. If we want all of them, wow, look at that, pretty overwhelming. There's a lot of stuff that we have on our screen, right? So from 300 as the lowest strike available all the way up to 540 as the highest strike available. Pretty crazy stuff. Let's keep it reasonable here. We'll drop it back down to 14. Yep. And now let's get into some of the filters, okay? So in the top left, right here, next to where it says options chain, we have the ability to filter for different things. So if we click on that, you can see we can filter for different sides of the chain. So do we want to only look at calls? Sure, we can do that. Let's just pop that over to calls, and now we're only looking at the calls. If I close that up, you can see here are our strike prices. This, of course, is your expiration date, and this is the call side of the chain without the puts. Pretty self-explanatory stuff. We will reset that. Again, you can do the same thing for puts if you just want to look at puts. After that, we have expiration types. Remember how we pointed out that we have weeklies, we have quarterlies, and then our standard expirations really don't have anything written after them. They're usually not in yellow. We can filter for those things. So all regulars are showing. All quarter, now we're basically, okay, so my apologies. This will filter for just what you select. So right now we're only looking for quarterlies. So now we can show just the quarterlies, right? If we go back in, and we change this back to regular and uncheck quarterlies, now we're just showing all of the regular expirations. And if we just want the weeklies, we can do that as well. So I'll come in here, I'll check weeklies and uncheck regular, and now we're just looking at the weekly expirations, right? You can see all of these are in the weekly camp. So that's what you can do for expirations. Maybe that's useful for you if you're looking at, only looking for quarterlies or standard expirations. You don't want to get wrapped up in the weeklies that might not be available further out in time, right? The next thing is deliverables. This is really only in reference to futures trading. Notice how if we change this to anything other than regular, all of the options disappear because we can't really take delivery of a non-standard product, right? The same thing holds true with minis. There's no delivery there. So regular is what you want to keep it on for options. Obviously, if you're assigned, you'll get assigned those 100 shares per single contract that you have, which again ties directly into our multiplier. So we'll uncheck deliverables. Days till expiration is a pretty cool one. What we can do here is, let's say that you are a long-term trader, so you only want to look at options that have at least 60 days until expiration. We'll type that in as a minimum. We'll leave the maximum undefined. And now you can see in parentheses here, the first series that's being displayed is 61 days out. So perfect. We don't have to scroll through all of the near-term expirations. The same thing could hold true if you're in the opposite camp. So we'll leave this at 0, and for a max, maybe we'll put this to 60. We're a short-term trader. We don't really want to go out further than 60 days. So now we've got 2, and you can see the max is out to 48. So that's a pretty cool little filter that you can use if you don't want to do so much scrolling and that bothers you. The next thing is the strike price, and something I would point out here is that this is the actual strike price. This is not a distance from the last price. So that was a mistake I made early on in my career. Like, let's say I was looking to go $12 below the 412 strike. So I would type in 12 here, or maybe just make that negative, right? That's not going to work, right? That's not going to do anything. So instead, if I wanted to achieve 400, you would obviously just have to type in 400. And it might seem like a very obvious thing to some, but again, it threw me for a loop, so I figured I'd at least mention it. And then we'll go to 425 as a max. Now, we're not going to see any change take effect here if we don't have anything opened up, right? So if we do open something up, notice how we're still just showing 14 strikes. It's like, all right, that's fine. But remember how before, when we had this set to all, we had to scroll? Well, now that we have it filtered for 400 to 425, if we select all, now we're looking at 400 to 425, right? Pretty self-explanatory there, but a huge time save if you don't want to be scrolling like a madman through all of the different strikes that potentially exist. You can filter it by that. So that's a pretty cool one. The last thing is the exchange, and I would just say that you probably don't want to play around with that one too much. Let's just drop this down to 14 and go back in here. For exchange, usually keep it on composite. You want the best options pricing out there. You want your options orders to be filled relatively quickly. It doesn't really make sense to select a specific exchange for an order to go through on. Just as an example, right? The bid here on the at the money strike, the 414 is 347. The ask is 351. If we were to change this to something like the ISE, Notice how now we're getting worse pricing. So the spread has increased on both sides by a cent. So now you're getting 346 by 352. So net effect is a 2 cent wider spread, right? So it doesn't really make sense. Just leave it on composite. You'll get the best pricing that way. So that is going to pretty much do it for our filters. I'll just leave those as off for now, but now you know how to use them. I'd say that the primary ones that you will likely be using if you decide to use filters at all are days till expiration as well as strike price. The next thing we can get into is the spread. So by default, it should be set to single. And that just means if you were to click here, you're going to be buying a single option, right? You're buying one call. If you don't want to do that and you want to do something a little bit more complex, like build out a vertical spread, you can click the spread dropdown and you can change it to vertical. Now, notice what happens here is that our strike prices are now 2 numbers because, of course, for a spread, you have multiple legs. Now, this is a good start, but it's not really the best way, in my estimation, for building out a complex spread. So to build out something a little bit more custom, sure, you can use this as a template. You can click buy. You can come down here. You can change the expiration. You can change the strike price. That's all well and good, but why not do it, right off the bat? So if we change this back to single, a cool little keyboard shortcut. This is what it is for Mac. I'm not sure what it is on Windows. I'll probably do some research and put it on the screen now. But let's say we want to create a vertical spread that's not just one delta away, right? So if we come in here, and we click buy on the 412, we have that single 412 call loaded up down here. That's good, but let's say we want to add a short leg to it further out of the money at 418. I'm going to hold control on my Mac keyboard. Again, I'll pop the shortcut up for Windows, and then I'm going to click on the sell side. And what that will do is it will change this spread to a vertical down below. We have a sell side now, -1, you can see right here. We have the same expiration date, but we have that strike, which I've just clicked in at 418. So a little bit more control this way. The other thing you can do is not just create verticals, but you can create all sorts of crazy stuff. I can come over to the put side, hold control, I can sell the 410 and buy the 416, and now I have a crazy looking spread that I've built out here as a custom sort of deal. Now, that's good, but I wouldn't advise that you go completely crazy. You want to keep things within the bounds of traditional strategies, right? And if you're not familiar with a strategy, it is useful to come in here and use this as a template, right? So if you're not familiar with what a double diagonal might look like, you can click this. And now what'll happen is you'll get your crazy strikes, right? We don't know what the expiration is going to be. It looks like it's going 2 and 4 days out. So we can click here and it will generate something that is a double diagonal. And from here, now we have a little bit more control over the expirations, over the strikes, so on and so forth. So if you're ever confused about a strategy, number one, you probably shouldn't be trading it. But if you need that template as a starting point, this spread dropdown could be potentially useful in that light. I'm going to change it back to single. We will delete this and we will continue along through our presentation. The next thing is our layout. Okay, so by default, you will always have the bid and ask here for your calls, and you will always have the bid and ask here for your puts. But aside from that, you can add additional information, just like you would on a watch list widget here in ThinkOrSwim. You can do that on our options chain grid. So if we click into this, we currently have the last and the net change. Well, what if you want something different? You can certainly come in and change that. So we'll go with theoretical price and the mark. All right, so currently, theoretical price is reading as if there were no change. It is the current price. It's basically the mark, which would be the midpoint of your bid and ask, the spread essentially. But if we want to see what this pricing might look like, let's say that we open up on Monday and the stock price, let's say we adjust it. Let's just pretend that the SPY opens on a $2 gap up and implied volatility bumps up by 1%, okay? So by changing that in our theoretical price window, which is right here, in the theoretical price column, we will see what that could potentially do to our options contract. Now, because we are looking at the call side of things and we bumped prices up and we increased the volatility, we should expect a higher premium. So what it's doing is doing some behind the scenes calculations based on the options Greeks. And if we were to purchase this contract on the Friday right before close at $3.51, we'll say, just to keep it easy, if we got those exact conditions, a $2 gap up and a 1% increase in implied volatility, that contract would, in theory, be worth $4.65 on the open come Monday. So a very cool tool that you can use here inside of ThinkOrSwim is that theoretical options pricing. We can come in and we can do some other pretty cool things. If you have a position, it will show that position here with a little tally or a little flag. It will show you intrinsic value, extrinsic value. That's a whole different conversation in and of itself. if you wanted to change these things individually, you could do so as well. You can click on this little drop down, basic quotes. Again, this is if you wanted to see the size on the bid, you can do that. So you get BS, which is bid size, not that other acronym. And you can see 260 were sitting on the bid as of the close on Friday, right? You can come in here, you can get as crazy as you want, net change, percentage change, all of those same things that you might be able to apply to a watch list widget are available here inside of our options chain. The cool ones here in the options theoreticals and Greeks, if you're interested in the delta, you can pick that up here. So you can see the at the money strikes usually have roughly a 50-cent delta. Again, knock your socks off, customize whatever you'd like. If you do create something that you find pretty compelling or something that you want to reuse in the future, come into layout, go to save as, and it will automatically populate this for you. So notice that we have position, intrinsic, and delta. It's labeling this position, intrinsic, and delta, right? Pretty self-explanatory. If we could press save, now what happens is I can come in, and at the very bottom, you see we now have an option, position, intrinsic, and delta, exactly what we just created. One that I particularly like to use is volume, open interest, and delta. Usually pretty good indication for day trades. You want to know where the liquidity is, where the open interest is, and what the rough delta is. Again, we know that roughly at the money, in the money, right at the money strikes generally have a 50-cent delta, but that's a little custom layout that I've used and saved for myself. If you want to delete what you've just come up with, so we'll delete that position, intrinsic, and delta, we'll remove it, and now it no longer shows up at the very bottom of our list, right? So pretty self-explanatory stuff, but all really decent customization that you should be aware of. That's pretty much going to wrap up our options chain window here. Let's continue along and get into today's options statistics. So this is a pretty cool tab. Over here on the right, or excuse me, left, get my directions messed up, we have 52-week implied volatility highs and lows, the current percentile, all of that information for all of the more technical applications of options trading for those of you who are probably doing more complex spreads and selling options. In the midpoint, or the center of this layout essentially, we get some statistics, quite literally as the tab is called, on today's options. Some pretty cool things that we can see here is how much of the calls or puts are essentially traded at the bid or below, at the ask or above, or in between the market. So this is just going to give you a rough indication of whether or not retail is in control of the options chain or the market makers are in control of the options chain. We would say that if something's trading at the ask or above on the call side, generally speaking, it's very likely that retail is just marketing into different positions, right? If something's trading more in between the market, then we would say that algorithms and more astute traders are probably entering more complex spreads, and that's kind of what's going on there. On the right-hand side, this is where things get pretty interesting as well. The sizzle index here in ThinkOrSwim is a 5-day moving, I suppose you could call it a 5-day moving average or just a 5-day average of the options volume that's being traded. So we'll put 5D down here for 5-day. So the total amount of volume here, which is, as of Friday, 8,285,808 contracts, is apparently less. It's 0.84%, or it'd be 84% of the 5-day average of the last 5 days. Again, I'm sort of explaining literally what these things are called, but the sizzle index 5-day average of the total amount of options contracts that have been traded on the instrument, and that is going to be a number read here in relationship. So today, in comparison to the 5-day average, right? You get your call sizzle, same thing, but just looking at the calls, put sizzle, same thing, just looking at the puts, so on and so forth, right? So what we would say about Friday, just to sort of interpret this and what you might say when you see these types of things, is that, there wasn't as much options activity on Friday compared to the prior week or so, right? So what does that mean about the underlying? Well, maybe people aren't hedging their positions in this particular underlying. Obviously, at the SPY, it's basically the S&P 500 market, quote unquote, right? So there's less hedging activity potentially going on. Again, it's just something that you might infer. It's not dead hard data. Let's close that one up and get into our options time and sales. This is going to be a hog on your CPU. I would not recommend that you keep this one open at all times during the trading day. What it can be kind of cool to look for is your biggest times and sales. So today's biggest, and it's going to show you a put and a call contract. You can see the code up here. So 17th of June, 2022, the 455 call seemed to get a lot of love. You can see right here, 9,150 contracts went through on one particular trade at $1.58. It'll show you the exchange. so on and so forth, right? So some pretty cool stuff that you can look at, but just keep in mind, this will be a hog on your system. I would not recommend keeping it open throughout the majority of the day, right? And you can add different filters if you want to look for different strikes, series, the quantity, right? If you're only interested in trades that went through that were maybe, 1,000 contracts plus, you could put that in as a minimum. If you're looking for things where there's big spenders and you're looking for contracts that were at least $1,000, so a $100 option contract, you could do so by changing the price in here. Again, it's such a hog on the system. I'm not even going to try to filter that for today's video, but that's where all of that information exists. The last tab, we're almost there here on our video. Thanks for sticking with me. If you've enjoyed it so far, drop me a thumbs up. If not, that's a-okay. I appreciate it, you sticking around anyways, even though you might not have enjoyed it. So regardless, product depth, what do we have here? We're looking at the options tab underneath. We're showing all. This is in terms of the side of the trade, so calls versus puts, out of the money calls and puts, or the average. We're just going to show everything. We're looking at all series, so you can see that's ticked off at the top. If you didn't want to look at so many expirations, you could just uncheck this and choose the ones that you're interested in, right? So maybe it looks something like that. You get the gist, right? We're going to turn this back to all. And then in here, this is the number of strikes, right? And then after that, we have the type of information that we're filtering for. So here's just a couple of decent things that you might want to pay attention to. If we change this to open interest, this is a graph where the most open interest exists. So we would say that the most open interest is here on this particular guy. If we could get the cursor to cooperate nicely. Let's see, doesn't look like it wants to cooperate. Usually when you hover over this, and maybe there's a better example I can pull up. Let's see, is it going to work here? No. Let's try extrinsic. Try going back to open. Nope, still nothing. So my apologies, guys, here. But traditionally what happens is as you hover your cursor over one of these little dots, there we go. So you can see that's popping up now. So the 17th of June, 2022, at the 500 strike, there's roughly 84,000 open interest, right? And we can prove that, right? So just to sort of bring that up on the screen once again, that's what it looks like when you hover. So it's finally cooperating. Apologies for the little hiccup, but let's go find that, right? So if we open up the options chain, we go out to the 17th of June. Here it is right here. And I believe it was the 500 call. So what we'll have to do is go to all. And if we scroll down to the 500, where's the 500 strike? Right here, and we go across, there's your 84,000 contracts in terms of open interest. Right? So it's completely true. Obviously, the platform's not going to lie to you, but just nice to see how those things sort of work and line up. So there's a decent example of how you might be able to search for where there's a lot of open interest, where people are interested in, generating some sort of trade. I'm going to put this back to all. We're going to go ahead and change this from open interest to, I don't know, let's go with something like theta, right? This is always an interesting one. So the steepest curve, which is way down here, notice how that's going to, go to zero very, very fast, is always going to be the nearest expiration, right? And that makes sense because we know that there's not a whole lot of time for that option contract to potentially move to in the money. So that's the steepest curve. And as you get further out, that curve will flatten. So something that's much further away has a much flatter curve, right? Obviously, we know that this pricing, if you look at it on a horizontal scale, would look something like this. As you get closer and closer and closer to expiration, theta starts eating away more and more and more. So that's a representation of that. And the same thing, of course, has held true on the put side for both this theta example as well as the open interest example. Let's just go ahead and do a couple of more. Where is it? Where's delta is what I'm looking for. Here we go. This one looks pretty cool, right? So what you might notice is that as you get further and further in the money on the call side, your delta is going to start decreasing lower and lower and lower. And that's simply because as you get more in the money, you get closer to that $1 delta, basically a synthetic long. So it makes sense that this curve will flatten out the further you get into the money. And the same is true, but opposite. As you move further out of the money, you're going to experience less change because there's less likelihood that you're going to be working towards that $1 synthetic long, and instead your delta will get closer to zero, right? So as that happens, it's going to start moving less. As you're sort of in this range in here, that's where delta has the opportunity to expand and contract. So just an interesting representation of that. That's really going to wrap up everything we've had to cover here in the trade tab. Really comprehensive overview in my estimation. If I've missed anything and you know something that I haven't covered or touched on in today's video, I would love to hear from you down below in the comments section. If you appreciated it, again, a thumbs up or a comment down below just mentioning that would go a long way. And with all of that being said, I wish you happy trading. I wish you a great experience inside of ThinkOrSwim, and I wish you a green trading week.